Divergence is when price diverges away from the relative strength. So if we go ahead and take a look here, and say if I just mark these highs, if we just look at the market structure here, we'll notice that we have a high here, we have a second high here, and a third high that occurs here. Now, if we were to go ahead and draw a trend line right there, it would be pretty easy to identify that this is going to be an uptrend, of course, with 3 consecutive highs. And on the other hand, if we look at the RSI and go ahead and mark this out, we'll note that we have a high here. And this time, the one that corresponds with the second high is actually a lower high on the RSI. And the third one that corresponds with the third high is another lower high on the RSI. Now, if we draw a trend line here, you'll notice that we're actually getting a downside move that's occurring on the RSI while price is still increasing. What this means conceptually is that each of these new highs that are being created on the asset itself are actually getting weaker as it's creating those highs. Because remember, this is the relative strength index. So the relative strength at each of these highs is less than what it was at the previous high. And a good way to think about this in an analogy sense is think of it like a train. When a train eventually comes to a stop and is hitting its brakes, the second it applies the brakes, it doesn't stop immediately, but rather it slowly comes to a stop before actually coming to the full stop. Now you can think about that the same way that price moves in a stock. It has a lot of momentum that's occurring like we're seeing right here. And before reversing, because it's very hard for it to reverse immediately, before reversing, it has to slow down, lose a lot of its strength, and then end up pulling back. So when you see divergence occur, this is generally a telltale sign that the price is about to reverse. And if we go ahead and wait for it to hit that key level and it's still showing those overbought conditions, then that is a very strong sign to go ahead, enter a short position, and play that to the downside. Now, typically divergence will happen in either 2 or 3, where this time we saw it in 3 phases. And if it happens in 3 phases, it's likely to see a stronger move occur to the downside, but it can also occur in 2 phases. And the main thing that you're really looking for is just a support break on the trend line. So if I were to draw a trend line for the lows here, you would notice that once we broke this trend line of support down here specifically, that's when the move really started to occur and we see that downside move truly happen. Also, notice when it broke below this trend line that we drew down here, we actually see that the RSI is beneath the level of 50. So that can be used as further confirmation to go ahead, enter a short position, and ride that to the downside. Now, there's actually a couple of different classes of divergence. And I actually got a little chart here for showing you guys the different classes and how we can use each of them. So we have class A, class B, and class C. Now, class A is kind of like the one that we just saw, where the asset price is consecutively making those higher highs. Now, what is the RSI indicator doing? The RSI indicator is doing the opposite, where it's actually making lower highs on each of the three movements. So notice like right here, we have a high that corresponds with this high, a lower high that corresponds with this higher high, and a third high that corresponds with an even lower high. And what is likely to happen here is we're likely to see a downside move occur, and the same thing for the RSI, of course. Now, what is this going to tell you? If we have class A divergence, this generally means that this is a market top or a reversal is likely to occur. Now for class B divergence occurs when price makes a double top, kind of like what we're seeing here. And while price is making a double top, we're going to go ahead and on the RSI, it's actually making a lower high. So this would be class B divergence, where if I go ahead and draw a trend line, first, if I drew a trend line for this, let me actually just fill these ones in. If I draw a trend line on class B divergence, it would have a horizontal movement on price and then a downside movement on the RSI. Now, what is this likely to tell you? This is generally a strong setup for how you can identify a double top or a double bottom pattern. and price is likely to break through this neckline area and continue lower. And likewise, the RSI would do the same. So for Class B divergence, this is typically a setup for a double bottom or a double top. Very strong setup right here for a double top or double bottom. This one is for more of just a reversal in general. And for Class C divergence occurs when the price looks something like this, where we see a new high and the RSI makes a double top. So it looks something like this, where if we draw a trend line here, it's actually a horizontal line, and for the asset price, it's actually increasing. Now, what is this going to tell you? This is going to tell you that we're generally likely to see a bit of consolidation of some sort before breaking either to the up or downside, and the RSI would level out accordingly. So those are the three different classes of divergence. And the one that we just demonstrated here, where we saw that reversal to the downside, notice we have the increase in the price, decrease in the RSI indicator in terms of highs. So that would, of course, be Class A divergence, where it's a market top and a likely reversal. Now, this is extremely visible if we're looking at something like Bitcoin. Now, if I go over here, let me go to the crypto section. And if I pull up the Bitcoin daily chart, you're able to see how powerful this truly is and how you can identify reversals before they even happen. Notice here, we have a high, a second high, and a third high. And then if we look on the RSI indicator, we have a high, and then a lower high, and an even lower high before we see a full move occur to the downside. Of course, if we draw a trend line there and a trend line here, we'll notice that prices are beginning to diverge. And when the lower trend line here is broken, this is when that reversal begins and a short position to the downside can truly be taken. So to be able to identify reversals before they happen, or know when you should get out of a position and just lock profits, is when you see divergence. And divergence pretty much happens on every single reversal on every time frame. Of course, some of them are just going to be extreme bounces and whatnot, but I would say around 90% of the time on one time frame or another, you're going to see divergence before we see a move to either the upside or downside, depending on reversal. And also, divergences are very strong, especially when they come in the shape of a wedge pattern on the chart. Notice here how I drew that wedge pattern, and we also saw the divergence occur. This shows that this is first a wedge pattern that already is a reversal pattern. And the fact that it had the divergence as well is a strong indication that this wedge pattern is confirmed, and we're very likely to see a move to the downside. So that would be Class A divergence. And for something that would look like Class B divergence would be, say, if we went to, say if we even looked at today's chart, actually. If we're wanting to see Class B divergence, notice right here, we have a flat horizontal top where the price tops out at the same level, but look at the RSI. The RSI is actually decreasing at each of these different highs, while the price itself is showing a double top. Now, as we mentioned in the chart, this would be Class B divergence, where we have a flat top on the price, a decrease in value on the RSI indicator, and this is a double top or a double bottom setup. Notice what happened after that. You can mark out where the actual the entry point would be, and that's at the neckline. We get a breakthrough, retest of this level, and then we see a nice move occur to the downside. So this is a very strong indication of how a double top works, and it's generally followed by Class B divergence. For Class C divergence, this is just likely to show that there's going to be further consolidation, and it's better just to wait it out and not really enter a trade until something else like price action tells you otherwise. But yeah, those are the three different types of classes for divergence. If you guys want to go ahead and take a quick screenshot, go ahead and do that. This is extremely useful in any type of trading, and it occurs in both ways. If I go even to look at bottom reversals, look at this bottom reversal that occurred down here before we see a move to the upside. If I go ahead and draw a trend line on the lows, you'll notice that we have 2 consecutive lower lows. And then look at the RSI. The RSI is diverging away from the way that price is. And simply you just draw a trend line for where you can establish your entry. We see a move occur above that, entry to the upside, play it up to a next level of resistance, and then go ahead and take profit accordingly. And let's see if we can go ahead and look at this other reversal that occurred actually from this morning. We see a strong move to the downside, and then we see a low here, a second low, and a third low. But look at the RSI that is occurring here. We're seeing divergence occur, and where the entry is, first of all, to create a trend line, notice this is a falling wedge pattern. We're seeing these two work in tandem. Go ahead, wait for the breakout and retest, and then you can play a strong move to the upside there. Even the smaller moves that occur like this, notice we're getting a nice little wedge pattern right here. We check the RSI. The RSI is showing us that divergence is occurring. Go ahead, wait for the breakout, and play a nice move to the upside. Even on the very small time frames like this, where we're seeing 2 consecutive higher highs. Notice on the RSI, we're getting that divergence that is occurring. And we can go ahead, establish a short position when the trend line is to eventually break, and then play that for a downside move. This occurs on all different time frames depending on where you truly are at. So what that means is if I'm looking at this on the 5-minute time frame, then I would use the 5-minute charts to enter a trade. Say if I'm looking on the 2-minute time frame and I identify divergence to occur, kind of like what we're seeing here, where we're coming into this key level of support. I go ahead, draw out the trend lines. Notice here, we're getting that divergence to occur on the RSI where there is higher lows here. Wait for the breakout to occur and then see a move to the upside. But if I go to pretty much any time frame that there is, even if we look on the 4-hour, go ahead and check what's happening here. We're seeing that we're getting those consecutive higher highs. Look on the RSI, we're seeing that very strong divergence to occur. Once that trend line eventually breaks, then you go ahead and enter a short position and complete that for a new low. Even on this move like that we're seeing here, go ahead and track this uptrend, mark out the different highs. Look what I'm checking on the RSI, we're seeing that that is decreasing. Go ahead and draw a bottom trend line for where to establish the entry. Go ahead, wait for the breakout, nice little retest, and then a strong move to the downside. But like even look over here, like we're seeing a nice little wedge pattern form on the RSI itself, getting divergence, enter a position when we see a breakout to the upside, and then ride that up on the way there. Even on like now I'm at the 1-hour time frame, go ahead and check this out. Higher highs, draw the trend lines that go with it. We're seeing the RSI go ahead and do the opposite, where that divergence is occurring. Enter on the break of the trend line with the red candlestick closed beneath, and then play that to the downside. So very strong ways that you can just look to trade in general. And you'll notice, yeah, this occurs on pretty much all different time frames. The more time frames that you're seeing divergence occur on, the stronger that divergence move is likely to be. And the larger the price target is also likely to be. If you're only swinging over a couple of nights, or maybe potentially even overnight in just the first place, maybe the 1-hour time frame like we're seeing here, this would have been a nice little 2-3 day swing here. But also the same thing for the downside move, we're seeing that divergence occur here. RSI on the 1-hour chart is showing us the opposite is moving. Divergence is occurring. Go ahead and draw up the trend line. Enter on that break right there and ride that up. So this would have been another nice little swing trade right there. But if you're looking to swing over a longer period, like say if you wanted to swing over a couple of months, well, you could look to use the daily chart. Notice we're still seeing that divergence occur here on the daily chart. Wait for that break below. And this would be a swing that lasted maybe a month or two before, of course, you see divergence again. And this would have been about a week or so swing. Okay, if you're looking to make a 30-minute trades or so and using the divergence play, typically you can look to play with the 5-minute chart or even the 2 or 3-minute chart. Whenever I'm scalping on especially the lower time frames and only looking to hold positions for less than 30 minutes, typically the 2 or 3-minute chart works quite well. Notice we're getting that divergence move right here. And then the breakout occurs at 8:16. And that move low occurs at around, let's see here, 9:04, which is a little bit over 30 minutes, but less than an hour. So about a 48-minute move right there. So if you're looking to make these plays that last like 30 minutes or so, look for the divergence on, say, like the 2-minute chart. Notice here, got that nice divergence that's occurring. And then draw the trend lines there, and then just ride that up. So yeah, scalping or day trading, typically use the 2 or the 5 minutes. The 5-minute might be a little bit longer for where you're identifying that position to enter and exit at, as the candlestick bars are going to take longer to develop themselves. And the next thing is actually called hidden divergence. Now, hidden divergence is something that is helps you identify where there's likely to be a continuation downward or upward for that matter. Notice here, if I go ahead and mark this high, and then I mark this high over here, and I mark the high on the RSI that corresponds with the first high I marked, and do the same for the second high that I marked. And if I were to draw a trend line for each of these highs, this one's pointing in the down direction, while the RSI this time is pointing in the up direction. This would be identified as hidden divergence, where you can look to establish a play to the short side. So if you're wondering how could you have possibly been able to see that this was going to make a move back to the downside right here? Well, you have the hidden divergence. You're seeing that overbought condition on the RSI. And this is also at a very key level. If we look here, this happened right in the golden pocket at the 0.618 level of retracement. Very strong opportunity to go ahead and establish a short position and then ride that down, as you guys saw there. That if you put the 0-day on this one, I think I watched it go from around 0.74 all the way to above 2 point something. So incredible move there just from using this strategy alone. So hidden divergence is when there's likely to be a continuation, as we're seeing here. In this case, it would be to the downside, where we have lower highs and higher highs, of course, showing on the RSI.